Maybe inflation in Japan could be the first sign of something turning into the markets, right? Because you have this kind of, triple whammy of normalization from the Fed, possibly kind of peak growth worldwide, and a little bit of geopolitics also in the mix.
Yeah, absolutely. I mean, absolutely. The number of influences in terms of Japanese asset prices, in terms of the Japanese economy, are myriad, because Japanese yen has this role as a risk-off currency as well. That really does complicate matters. First and foremost, with respect to the Japanese economy, they are still trying to solve structural problems with cyclical policy. They therefore, I'm sure, can generate inflation at various times, because I think we're learning quite acutely now that we do not understand inflation anywhere near as well as we thought, and certainly the quite simplistic model of looking at unemployment and potential growth and stuff really is not going to give you much of a steer over short and sometimes long periods of time. We've had global supply shocks buffeting economies now for a number of years, which have really distorted some of those relationships. So even if they are able to generate inflation, are they able to generate sustained wage growth, which is enabling consumers to not be losing real purchasing power? I'm not convinced, because this is a nominal economy which is shrinking.
Del, is there anywhere else in the world, apart from the Fed, that can actually raise rates at the moment?
Yeah, but for the wrong reasons. There are a couple of emerging markets that have to.
Yeah, I was thinking of the good reasons.
Right, yes. So this sort of comes back to the point about why should we be scared of the 10-year at 3.1, 3.5, 3.7? Why is it going up? For the right reasons. The US economy is strong, the global economy is strong, and we have moderate inflation. That's a really good place to be. And so even though the Fed might hike another 2 or 3 times this year, as the 10-year will still keep going, that curve will not invert. And that's a key point, is you've never had a US recession without an inverted yield curve, and you've never had a US recession without positive real rates. And Fed funds rates are negative in real terms right now. There's no recession coming next 1 to 2 years.